I am sorry I could not bear that elevator music for one more second. Don't know why, but it seems our music bot is not working tonight. So we'll have that fixed in right after this call. Can you guys hear me all right? And let me just confirm as well that you guys can see my screen. Awesome. Well, I do hope that everyone's doing fine. We had a huge day. Let's be honest, if you look right at the bottom of my screen here, you'll see our range. Well, actually, you won't because we just crossed into a new day. If I just look back, you'll see that is the right range. All right. Well, technically, no. I do want to get the right range for the day, so give me a second here. 746 handles. Huge daily range, but it doesn't take into account the fact that we had huge movement to the downside as well. So definitely a very volatile day filled with opportunity. Now, is it in the direction that I was initially looking for? Not at all, right? You guys were, well, I don't know who was there, but I did a public weekly outlook. I was looking for continuation to the downside this week due to the fact that on my weekly it was extremely bearish in my eyes, even though ES could have potentially brought it back, but definitely some very nice price action to the upside. I never like to call reversals when we are extremely offside. So for example, I don't like to say that we are going to reverse to the upside to be bullish when we are extremely bearish in conditions. But we had some initial insight, right? Which I did not notice. I'm going to be 100% straightforward to you guys. But we invalidated this gap, so that was definitely our first sign. And today traded back into it. As you can see from the candle closes, we traded way lower. Basically, we traded way down. But from our candle closes, you can see we definitely respected it. Ended the day with a very bullish close to the upside, trading back into our premium and efficiency. And of course, right now, sky's the limit, right? Low resistance liquidity to the left. Definitely some opportunities there. I believe that's where we're going to be heading next to this high probability liquidity pool. But enough talk about next and what's happening then. Let's talk about what happened today. Due to the fact that we were within this higher time frame and efficiency, which I will just mark out just so we can see it on our lower time frame as the daily fair value gap, we did not have to go into the 4 hour or the 1 hour or anything above the 15-minute because the whole day was inside of this daily inefficiency. Let me actually just change my settings here. I mess around with the visibility settings just so I can see it on my 15-minute chart. Once we go down, you had this beautiful daily fair value gap that definitely got far. Let me just align that. All right, what else did we have? Well, we had CPI at 8:30, right? High impact news event. I'm also just going to mess around with this just to remove this vertical line. All right. Overnight trading, pretty standard, right? Consolidation throughout. We opened, expanded into a low, and then consolidated for a while up until our news, which we did a short-term manipulation to the downside, right? Taking out liquidity to then go to the upside, which was a real raid at that point. At least for myself, I feel that this leg down was definitely beautiful. We just happened to reverse during the day, right? We had a nice, I was going to say Thursday reversal. We had a nice Wednesday reversal right there, definitely. We had our raid off of that news. What do we call this, right? Specifically with the news and this specific timing that is 9:30 open, we call this move our Judas swing. This is what we are looking for. And then if we go even lower, well, actually, let me just mark out the liquidity here because we had beautiful equal lows below to be used as an objective for any short trades. Definitely looking at this. More specifically, I would also be looking at this. Why? Because these equal lows are in close proximity to this level. So I never see price going for these, but leaving the near liquidity open, if we can say it like that. If we go down to the 1 minute now and see it with a little bit of a closer perspective, you'll notice, as we said, right, CPI, we went lower on CPI. CPI often runs on side with price. Then we had our Judas swing that was not needed, but came. We also had a higher time frame SMT at this level, but we don't even need it because if we look right here at the exact high, and of course I'm always waiting for 930 to engage, which is why I'm referring to these levels with hindsight. But if we look right here, I'm actually not going to mark it out as SMT, but you can see the SMT at these levels. If I'm more precise, it would be this swing with this swing. So tiny little local SMT right up there. Definitely some beautiful movement afterwards, right? We had a huge expansion lower. And where is your breaker block? Well, my breaker block, my first breaker block is right here, right? We're talking specifically about the Rise model. Now, what are the unicorns associated with that breaker block? Well, it's very simple. You have this inversion fair value gap, which is in close proximity, and is the nearest inefficiency. What do I mean by the nearest? Well, I'm not going to look for it to trade back higher. It does not need to. So yes, I could say, oh, let me use this fair value gap instead. But that's not what my model is. My model, I want to be in the trade on the first possible retracement to a unicorn. And that to me is a unicorn. Even though it is not overlapping, it is in close proximity. And if I just look, this is also a breaker, right? This candle right here is also a breaker. Once we trade below this low right here, this is also a breaker, which means that at the point of your inverted fair value gap entry, we move it aside. This inverted the gap. The next candle just barely traded back into it, right? Even after this whole, what is that? This whole 50 handle candle, we traded right back into it. And then after a little bit of back and forth, a little drawdown, we basically just dumped, right? And all the way until 11, which we'll get to. But for now, what would be your objectives? What would be your stop losses? This is a definite setup. As I always say, if there are any questions, feel free to just type them in chat, interrupt me at any point in time. But if you enter off of this unicorn, right, this Rise model, wait, why was 592 not a targeting the morning for you? 592, what do you mean by 592? 18592 as an objective? Yes? All right. Well, we'll get into our objectives in a second, so don't worry. We'll go over that, and I'll answer your question right at that point. So just very quickly to go over the stop loss, 3PD array stop loss rule. As always, nothing new. Inversion fair value gap is the nearest. Then you have the fair value gap and the order block that we just formed above, giving you a 22 handle stop. So definitely very, very nice. 952. So 952 would be to the upside. Do you mean 17952? So very far down, right? 17952. 18952. An objective to the buy side, you mean? It's an upside target in the morning manipulation. So do you mean by morning manipulation, do you mean this news specifically? Yes, we were 50 points away at this level. I don't look for specific objectives in this case, because my key area in liquidity has been taken. Do I need price to refer to something that happened last week, 2 weeks ago, 3 days ago? No, not at all, right? And I'm guessing you are going to be referring to this swing high, 1972, or 52, you said, actually. So it would be even lower. I was hoping for SMT where NQ took that, NES didn't take it. Well, truth is, it wouldn't be needed. That's actually the main issue with a lot of people is, see this level. What is that? That's previous day high. I don't need it to go anywhere else. No, you're good, you're good. But I believe it was 972 and not 952, this specific level. Or maybe it was something else. But just to understand, my model and my job as a trader is not to understand what is going on in the markets. I do that as an analyst because I have fun as an analyst. But my job as a trader is to be able to spot high probability opportunities to make money. Now, for high probability opportunity, do I need it to take the exact level, right? I had a student talking to me this morning who basically was talking to me about how he had that inversion fair value gap level, or he saw that that was the most precise level. But I was explaining to him, oh, hi, Matt. Well, there we go. I was explaining to him, you don't need to be precise. right? And it does not need to go to your level. That is where you'd want to see price go, and that is where you'd want precision to be found, but you don't need it to go there. From the point we took out previous day high, and here I keep talking about it, so let me just mark it out as such, not previous day low, Oliver, previous day high. From the moment we took previous day high, I understand that now we are at a key point because that is an important level. I understand that liquidity resting above the previous high, above the previous day's high, and below the previous day's low is of importance to me. So if we take this liquidity and my bias is bearish, and afterwards I see a rise model form, which means I do have local SMT, I have displacement, which creates my breaker block, which creates my entry pattern of a unicorn, then I understand that this is a high probability opportunity. Of course, there's a little more that goes into it because I want to align with intermediate and lower time frame order flow, meaning I want to align at a specific time and during specific conditions, sure. But the truth is, I don't need for it to go anywhere other than that. And of course, my bias was wrong today. I'm not gonna lie to you guys. I was looking for shorts, and I actually missed the morning short on my real accounts and ended up trading a small piece of the long and closing my day. So to me, I was looking for shorter. And so since my bias was wrong, I was able to spot this opportunity. But if your bias was long, to me, there was no opportunity starting 9:30 because there is no breaker block that formed there. And of course, we can look deeper, right? I haven't really looked into it because, as I explained, my bias was not to go long. But yeah, I don't even see a breaker block formed even up until 10:04. And from this point on, you're way too deep in the range, right? To understand that, hey, this is not bullish price action. And then, of course, we're going to talk about the long and why specifically it happened. But I just wanted to explain the thought process behind it. Once we were halfway through, data lows were obvious, and then you would expect a collapse beyond it. Sure, at some point, yes, but that is not how I basically look at my setups, look at my trading. It's very simple. I had a high probability opportunity here with a higher time frame point of interest. SMT was present, which is one of the rules of my specific model. If I look at high probability objectives, I can utilize my standard deviations, understand that we are trading inside of a very big range, and currently my target, my objective would be data lows, sorry. That is a key point in which I would look to take profit, right? That is my objective. But I also understand we are within a daily bullish inversion fair value gap now. This gray zone you see is a daily bullish inversion fair value gap. So we could reverse at any point in time, and that is stuck in my brain, right? I am envisioning this possibility. If I go to a 5-minute, just real quick, so I can give you guys the actual objective, you'll see that our first discount in efficiency is this fair value gap. As I always say, I want the inefficiency to be fully in discount, right? A fair value gap at equilibrium that is barely in discount, or here like that, for example, that is at equilibrium. That is not in discount to me. So I have my discount level, partial right here. As you can see, beautifully hit, and did not align with standard deviations very well for this specific leg. And of course, if we use the tiny little breaker that would have been used for a possible entry, there might be some better targets, but I don't pick and choose, right? Today, standard deviations did not align very well for that specific setup. But if we look partial at 3.9R, and then we had a beautiful 7.52R at final take profit. That is the trade that I would have liked to spot this morning, definitely, at least for myself. And of course, afterwards, the runner could have held all the way to the final objective, right? Basically looking for engineered liquidity. We'll head back to the 15, but for a nice end level of 14.81R. So just before we dive into the mechanics of the intraday reversal and the long opportunities, do we have any questions about this morning short setup at all? All right, I don't see anyone typing, so I am just going to move forward so you guys can possibly understand where I come from. If we go back down to 15, you were no sir clean. All right. To me, when I look at the 15-minute chart, I'm looking for levels that are too clean. ICT uses these words a lot, actually, not used, and I just love the phrasing, right? It's levels that are too clean. This should not be equal. This is too clean. And of course, if you compare it on ES, you'll see a bunch of SMT at these levels, right? And that is understandable. For ES, the equivalent objective was this. But then you see how the SMT was formed. If we look and just draw a vertical line at this level, and I want to make it big, and I'm very zoomed out for a very specific reason. The specific candles don't matter. I'm looking at the market structure. That's all I'm looking at. I'm looking at the movement, just like I could look at a line chart and see the exact same thing I'm trying to show you guys right now. Divergence, key level hit, right? I understand that the liquidity pool below this consolidation that form multiple relative equal lows is a high probability liquidity pool, is an important liquidity pool, if I can say it like that. There is SMT formed here, right? And more specifically, this is also New York low of day for Monday. Is it a very important level? No, we can deep dive into Monday's range and how it can be utilized within the week, but I just wanted to point that out. And there is SMT between ES and NASDAQ. Which means what? I don't need to understand what's going on. I just need to understand that these things being present at these important levels tells me that there could be a reversal. Put that with the fact that we are within a daily, inversion fair value gap. I do need to point it out. And yes, you can say, oh no, we traded, what is that, right? We traded like 150 handles past it, almost 200 handles past it. I don't care. I'm looking at the daily candle close. I have plenty of time for the daily candle close. How do you get comfortable longing the bottom? Simple, no emotions. I don't have emotions. That's what I've been trying to explain pretty much. Well, I don't have emotions. That is completely untrue. That's not what I'm trying to say. The range was huge, it's CPI. It is CPI. Just thinking about average ranges in relation to that specific news, you can expect multiple 200-300 handle opportunities within that single day. So it's that simple. That is the best explanation I can give as to how to get comfortable at that point on. Yes, of course, the range was huge, but the thing you need also to take into account, take into account, is that when I'm trading this long, and especially as I explained, as I have been counter bias, the only thing that I am looking for at this point, pretty much, is a retracement. So my objective is not the highs of this range and for us to reverse during the day. Why? Because we don't see a lot of intraday reversal, right? It's not often that we basically form a higher time frame reversal within a day, right? We don't reverse often on the higher time frame. That's just how it is, right? So because of that, I always frame these trades as retracements. So if I'm trading this long and I'm anticipating that this long will be a retracement, then I have a low-hanging fruit objective. And if I'm still in this trade from this point on, and of course we're going to dive into it, the specifics of the objectives and such, but if I'm still in this trade, I have a runner, I'm break even, I don't care about the outcome. So that's how you get comfortable. You need to know your model, you need to know what you're looking for, and of course it just takes a lot of time and experience. I don't mind trading a higher time frame retracement. And by higher time frame, in this case, I do not mean 4 hour and daily. I mean intraday. So I don't mind trading an intraday retracement. So in this case, by the way, this level is our relative equal lows. I'm just going to mark them out as such. I don't have it. Let's just call them what they are. Relative equal lows right here. Took out this level. Again, same logic. I have my higher time frame point of interest, and I'm going to zoom in a little for this one. I have my higher time frame point of interest. What else do I have? Let's look at the first SMT that formed after this level was taken, right? Okay, we're starting at this point. What is the first SMT that formed? Right here. We don't even have to look further. We just see the first SMT that was formed. Well, technically, actually right here, but this did not form a swing point on NASDAQ. Who cares, right? Let's just dive into that one. First SMT formed. Yes, it got later invalidated, but then of course confirmed as we move forward, right? We just had more SMT, a little lower to go on NASDAQ. Sure. But what are you looking for? If you are trading the RISE model, right? What are you looking for at that point? From this point on, higher time frame point of interest. I also have SMT. So I'm looking for a unicorn to form, and I'm long if my bias is long. What is the first unicorn that formed? Well, looking at this doesn't look like a swing point. I'm seeing this one. This is the one that jumps in my face, right? Tell me if I'm wrong, but this is the first unicorn I see formed. And I see right here an overlapping fair value gap. When did we form this unicorn? Once we traded, well, this breaker block, I mean, once we traded above here, forming a market structure shape. Cool. When did we form the fair value gap? On the same fucking candle. What did the next candle do? After the fair value gap was formed, right here, traded back down into it. Boom. That brain dead simple. Now, what are your three PD arrays? Well, you have fair value gap, order block, order block. Stop below this low. The point where I was getting at, which Emil gladly reminding me, is that the last thing we need is for it to align and make sense with time. So of course I can call this 10 a.m. open and open low, right? Yes, we did put up a high, but we can always reverse this candle. So I won't have a lot of confirmation from that. Looking at daily power of 3, we could also just keep going down. So in terms of power of 3 and 10 a.m., it is not an A+ setup. That is an A setup. But where are we? Well, if we look right here, we are within the 1050 to 1110 macro. And I've been very consistent with saying that this macro is oftentimes used to spool. Every time I say it, you guys can see it on YouTube. I can't say this word. To spool against profitable AM traders. That is that simple. Oftentimes, and it will align with a London close reversal, which is one of the very specific frameworks I trade. You can call it a late New York reversal, pretty much, looking at after 1030, after the opening range has been put in, looking for a reversal on price, because the opening range is often very trending, one direction. And as you can see, you have the beautiful result, right? And if we look at our standard deviations very quickly, you can find a very clear partial objective, right? And of course, usually I would refer to this large range. Why am I looking for closer objectives? Because at this objective that aligns with my reversal range and is liquidity in premium of a 1 minute range, of course, that is already 2R. So no, I'm not going to go as I would usually do and look at the 5 minute range and then say, okay, well, what's my most recent 5 minute range? This 300 handle move. So before I can take money out, right, at my partial objective, I need to let it go all the way here, which would mean that from my entry, my partial objective would be at 163 handles. I am not comfortable with leaving that much on the table, right? Which, if we talk in terms of R, that's 5R, which means that if it goes here and reverses, I lost out on 4.52R. That is not something that is acceptable to me. So what I'll do is I'll take profit before, but I'll just take profit less. So one contract off at this key opportunity. Then you have 4 standard deviations, which are hit at this point, taking out this liquidity inside this fair value gap. If we don't inverse this gap, I'm going to expect the continuation to the downside. Did not happen. We continued, but at that point, I already took money out. So now the stress is out, right? Mithy, you were asking and saying pretty much, how are you comfortable with these types of things? I'm comfortable because first, I have great risk management. And second, because I'm always paying myself. Even if I'm wrong, I oftentimes get a chance to take money out the trade. If I'm up 2R, why am I not taking money out the trades? That's 68 points. I'm more than happy with 68 points. Truth is, today, my whole move stopped here. That was my trade. Am I happy with the 600 more handles that I left on the table? Hell no. Truth is, I was trading Apex accounts, so that would have messed up my consistency, right? Which is why I cannot wait to be fully self-funded. I can't wait to be on my personal account because today would have been a home run. Definitely. Beautiful short opportunity, beautiful long opportunity. Missed the short. I was on Apex for the long, which means, by the way, if you guys are unfamiliar, there is a 30% consistency rule, which means that my best day cannot be more than 30% of my total. So you can't have too big of home runs. Agreed, we couldn't expect the full round trip at that point in time. Well, at least that's to me, right? I never expected us to fully reverse. As I said, I was bearish at the beginning. But just in general, even if you expect it to go here, that is your target. There's nothing that's going to tell you that today, this time, this trade specifically, it's going to go there. You can show me 98% stats. It's not a certainty. So every time you can, just take money out. But don't start taking money out here, 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 just because you're scared. I have logical reasons for taking money out. I'm up enough R over 2. This is a key level in price. I have liquidity inside of the reversal range of my breaker standard deviations. Right here, I'm up enough R. We just hit terminus of this leg. We could now reverse lower. We could be done. There's liquidity here. We just swept. Done. There are logical reasons. Then you have our partial, which is the first premium inefficiency. In this case, a bearish order block. That is another level. Once I'm here, there is no reason to take money out up until the last. Why? Because this is all low resistance liquidity through the form of failure swings, right? None of these swing points broke their previous, except here actually. So technically I would have to say that this would be low resistance, sorry. But I'm anticipating that once we start trading above these highs, we're going to explode. See, we barely took this one and then went back down, but afterwards, you can see from the result, definitely, we started trading above this specific level, and then we just pretty much, well, actually, we didn't go that far. So we went until these levels and then traded back into it with a little more of a higher resistance. Let me catch up on the chats here. I expected back to 10 a.m. because of the bearish order block, but it went wild. Yeah, definitely. It definitely flipped. To me, that was unexpected. To be honest, looking back at this day, reviewing it, I can't believe that that daily inversion fair value gap just went out of my mind, because on a regular note, the whole morning session for me would have been just waiting for a bullish breaker. So I guess in that sense, I'm kind of lucky that I missed a short, which meant that I was looking for a trade later on. Because if I did trade that short, I would have been still very happy with the results, crazy results, but I would have been done for the day at that point. A bit more pricey than Apex. You guys are having a full-blown conversation. I love it. Do you have max wins on challenges not greater than 50% of the channel? Yeah, exactly. So Top Step has consistency rules on their challenges and not on their funded accounts, express accounts that they call them. And Apex doesn't have any on challenges, but has them on their PA accounts. So they're exact opposites in this way. Would you consider this week a void profile? A void profile is not something I know. It is not a concept I know. So you would have to explain to me what that means in terms of price for me to see if I can consider this. Oh, a void profile. Do you mean just not a profile, right? An unusual profile in the sense that we had no manipulation below weekly opening. We did not. Are you sure? Let me just look here. I'm looking at my power of 3, which is currently not loading here. We had one right on the open. True week open, at least. Oh, okay. So I'm not going to dive into all that true week open and all that stuff. True day open, true opens, true opens. You guys know the levels I use because I put them in my indicator. This is what I use. I use the real open, which is daily candles open. I use midnight opening price as a specific level. Now, if we're going to be talking about, right, power of three and all of that, you can use a bunch of different opens, which is why I don't invalidate, right? And I show credit to all these theories that people share. But the truth is, I like to keep it simple, which means that I don't want 5 levels on my chart to tell me what's the premium and discount, what's the real opening to look for power of 3, because I have the experience to be able to profile these weeks. I've practiced and I've looked at a lot of charts to now be able to profile these weeks. Am I always right? Fuck no. I am extremely consistent. And I would like to, well, I hope you guys notice that through the weekly outlooks and the PA reviews and whatnot, right? Our live trading, whatever it is. So I'm not going to implement more stuff into it, but I'd be curious to know how you personally utilize these true open levels. And just so we can give it a quick close, what do I always say about the PM session? If you had all these opportunities, I'm never going to consider any PM trades. So maybe there is a nice opportunity. I actually see one right here, but I'm not even going to look, because at that point in time, I am never predicting that we are running the whole afternoon for another 300 handles. So the only way I'm still in this trade is if at this point in time, I still had a runner from my initial position that led to closing at 4, right? And that was very near high of day. Awesome. You could have closed at 4 for about 22R. Beautiful trade. In the sense that we had no protraction, true week open. Sorry, I'm just catching up on chat, seeing you guys talk. But you say no protraction, but if we go back and we look at Monday, right? And yes, of course, you can utilize whichever open you want, right? But what I saw is we gapped, we filled partially that gap, and then just started expanding higher. And we formed clear manipulations on every low, every daily low. And if we go look back at our daily chart, we invalidated a key area in price. So to me, Monday can become low of week just like that. It doesn't need anything more. If we look at ES, you can see how further down it traded than NASDAQ. And if you're asking me, do I anticipate that tomorrow or Friday we'll go back and revisit that opening price? No, I don't. We could, definitely, right? We're in a daily bearish fair value gap. We could form a swing point tomorrow or even start expanding lower tomorrow. 100%. But that is not the highest probability outcome based on statistics. So I'm just not going to be framing any ideas like that, never attaching any kind of wants to my charts. This is what I think will happen. I also always share what I want to see happen. If during this weekly outlook, I would have said I want to see price go up, but I don't think it will. I said I thought it will go down. But I was wrong. Once in a while, I can allow that. Do we have any questions, right, about anything, right? You guys were very talkative tonight. I loved it. Doesn't happen quite often. But definitely a lot of opportunity on this very volatile, right, 1,000 handle moves that we did today. If we combine both moves, which is what I like to do. Yes, of course, there's range, but there's also movement. We went about 300 handles lower and then 600 something, 750 handles higher, actually. No questions. Don't see anyone type. All right. Well, I hope you guys enjoyed. And we'll see each other tomorrow for another one of these PA reviews. You guys have a great night. Good luck trading tomorrow.